let's talk what rating agencies are forecasting for this year. To discuss that, let's connect with Asti Seth. She is Vice President and Senior Analyst with the Sovereign Risk Group. She represents Moody. Asti, good morning. Thank you for joining us. Asti, now you have retained the credit rating on India, but you expect that the government's fiscal position to remain weaker than peers over the medium term. The stance was taken without taking into account the recent measures like diesel price hike or a proposed diesel deregulation. Are you likely to revisit your India rating now?
With regard to our rating on India, the sovereign rating on India, in fact, the Indian government's fiscal position has long been weaker than that of its similarly rated peers, that is, other countries that are rated Baa3. India's rating is still Baa3 because this fiscal position is supported by some buffers in the Indian economy, the most important of which is that the private sector in India does save substantially, and this savings rate is actually much higher than that of other countries rated at the same level. So that's one buffer. The second buffer is that the Indian government's debt is fairly long in terms of its maturity. So even though fiscal deficits are high, because a very small amount of debt has to be refinanced every year, its borrowing requirement is not as high as it would otherwise be. So that's the second buffer. And the third buffer is that most of the government's debt is actually funded domestically, which is slightly different than several other countries in the same rating range, which is Baa3. Because its access to domestic financing through the banking system, through the insurance sector is fairly solid, this also provides another buffer, and this is what accounts for the rating at Baa3 and the outlook at stable. You asked whether the diesel price hike and the deregulation would, it's not really deregulation, I guess it's merely allowing the companies to raise prices per market conditions. This certainly will have an impact. It will not be significant in the near term, of course. So the current year's fiscal deficit is unlikely to come down significantly because of this recent price hike announcement. However, if this is followed up over time, as the government has mentioned that it will, if fuel prices overall are allowed to adjust per market conditions, the subsidy burden on the government will indeed come down, and this may provide some support to the fiscal position over the medium term.
Right. Actually, these reforms like deregulation of diesel, GARP, and even the possibility of a breakthrough on GST reduce the possibility of a downgrade in the near term. Is it still push to wall to take some reform steps?
Certainly. Well, our outlook on the rating has always been stable. So we thought that the risks on both the negative side and the positive developments were balanced. So we've maintained a stable outlook. The announcements recently merely support the fact that the rating outlook is stable, because we had expected that as growth conditions deteriorated, the Indian government, like any other government in a similar situation, would take some measures to address the deceleration in growth. And the measures that you've mentioned certainly are in tune with that expectation. So with respect to our own rating outlook, it was stable before the announcements, and it remains stable today.
As we speak, the finance minister is meeting investors, and he's trying to hard sell the India story. He has also assured fiscal deficit will not exceed 5.3% and will be brought down by about 60 bips each for the next 4 years. Since you track the Indian economy for long, and usually these roadmaps are quickly forgotten in election year, do you think India can this time pull through?
We have always felt that the fiscal deficit in India is really affected by growth conditions in India, by which we mean that when growth decelerates, when it goes from 8+% levels to 5% levels, government's revenues tend to come down very strongly, and this really widens the fiscal deficit. So the corollary to that is that if growth revives back to previous levels, which we don't expect to happen in the near term, but perhaps could happen in the medium term, if that happens, then the revenue buoyancy alone will help address some of the fiscal constraints that have been in place over the past couple of years due to lower growth. So we really think that it's a revival of growth that has to precede stabilization of the fiscal position.
The FM's roadshow is also expected to help India in its divestment program. Do you think we can see stake sales of state-owned companies can help in easing some pressure on the fiscal deficit front?
when divestments have been announced, we found that the targets have been hard to meet. So if you looked at the history of divestment in India, there have been, in different years, different targets set, and different things have intervened, either market conditions or political conditions or something has intervened, and these targets have generally not been met. So if past history is to be the guide, one should be circumspect in terms of the expectations regarding divestment. However, we do note that over the past few months, the government has shown renewed enthusiasm at all levels in terms of policy, whether it's fiscal policy, whether it's regulatory policy, and this could affect the way it conducts its divestment program as well. So we could see a break with the past, but we ourselves are fairly circumspect in our expectations regarding divestment.
Actually, final question. You expect India to grow at, or Indian GDP to grow in the range of about 6 to 6.2% for FY13, FY14. Do you see room for more upside if the FM is able to push reforms?
I think the upside will come from three possible factors. One is an acceleration of the pace of policy change, particularly policies that affect investment. And those, in general policies, even when they're geared towards reviving investment, they tend to have an effect over the medium term, not the near term. But if we found that inflation, for instance, was abating, which led to borrowing conditions also becoming better because of an improved interest rate environment, that could certainly accelerate domestic growth. The second upside surprise could come from a global growth revival. That has been something that has dampened Indian growth in the last couple of years. If that accelerated, and we are seeing some signs of that around the world, that too could provide some upside risk. And the third, of course, is the monsoon. If you have a particularly good monsoon this year and a good sowing season as well as harvest, that too will affect how far growth can revive, how much further up from 6%.